Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. So excited, Miguel, excited to have you spend some time with me. And I appreciate your flexibility. I know, this just schedules get shuffled, and I think next week is New York Tech Week. So there's a lot of people flying in. So appreciate you making room for me, and I'm excited to just go deep on venture, the challenges, higher level market trends. So there's a lot to unpack, but, maybe just tell me a little bit about, your early career. Where'd you go to school? What did you initially study? What did your parents, want you to do growing up, and walk us through how you got to where you are now.
Yeah. First of all, thanks for having me. I'm always happy to make time, and I'm actually missing most of New York Tech Week next week. As we as a fund, we're more LATAM focused. So this week was actually a busy week for us. It was LAFCA week, which is the Latin American VC Association. So we had everybody from the whole region in town this week. So I was actually busy running around town this week, meetings, LPs in town, other GPs in town, founders. So it's definitely been interesting. And then next week, I'm doing a couple of events, but they're all like Latin Heritage Month / New York Tech Week focused, Monday, Tuesday, and then Tuesday night I actually fly out to Mexico City because there's a couple of events happening in Mexico City there next week. But yeah, happy to tell you, a little bit more about myself and my background. So I'm Swiss-Colombian. I have a Colombian mom, Swiss dad, born and raised in Zurich, Switzerland. So that's where I went to school. I went to Swiss high school, but then my parents thought that it would be good to also be proficient in English. So I actually went to an American high school in Zurich the last couple of years, so part of high school, and really fell in love with that American school system, or I should say educational system, of thinking that you have, so I played soccer, of having teams, being part of school, and that kind of school spirit. So when I was looking at American universities, I knew that the moment I graduated high school, also Zurich is a great place to grow up in, but it's still a small town. So when I speak with American friends, it sounds very similar, like the small town mentality here, where you grow up in a mid-sized small town, and you just want to get out and go to a big city. So for me, that was the US. Go far away, the experience and the adventure. And also I got the opportunity to play soccer in college a bit. So I went to university in Boston, small finance school, Bentley University. That's how I came to the US. And so it was 4 years in Boston. Got my first job in investment banking in New York. Did the classic analyst program for a little under 3 years. And I was also fortunate that my managing directors, they recognized, because I was always attracted to media and technology. So I was part of a TMT team.
TMT, that's there's a bunch of people that I know from JP Morgan. They were in one of my programs previously, and TMT has been kind of a pretty popular focus area.
Yeah, I started at a big investment bank, Katie Swiss, but then got a job offer from a middle market investment bank called Mesa, which was only focused on digital media, traditional media, tech. They don't exist anymore. They've actually since been acquired by Hooley and Loki. So today they're essentially Hooley and Loki's TMT team here in New York. And that was a great experience, actually. We were working just as much and had just as much business as a bulge bracket, but being part of a smaller team, the MDs, they recognized that as analysts and associates, especially since we were servicing mostly on the sell side, building those relationships with founders that we can relate more to them. We're closer to their age, and they really encouraged us to go out to events, meetups, and that's really how I started building my founder network and in the ecosystem. And then of course, them also taking us on the road shows, getting to know the corp dev teams at the time. The buyers were the Yahoos of the world, AOL, Time Warner. Facebook had just started really acquiring businesses as well. Zynga was actually very active acquirer at the time as well. And so that was cool because that's really how I started building my network. And that's also how I met my co-founders, partners in my first business, Elite Daily, which is a digital publisher that my friends David and Jonathan started. And then I joined them as an early employee, part of the founding team. And it was really a great ride. We're fortunate enough to sell to DMGT in 2015. And then when my earnout finished in 2017, started thinking about what I wanted to do next. And I knew two things. I knew I definitely don't want to do a business that is advertising revenue driven again. And I want to do something that is recurring revenue. As I was talking to a lot of friends who were running SaaS businesses, and just that idea of having recurring revenue after doing an advertising business sounded great to me. And sort of the Europeanity with another friend of mine, Killian, who's a brilliant engineer and originally Irish. So the two Europeans, it was an interesting time in 2017. GDPR had just been signed into law, but wasn't in effect yet. So we started speaking with a bunch of engineering manager friends at large tech companies. And through Killian's twin brother, who happened to be the DPO at Twitter, started to speak with a bunch of people there. And not surprisingly, they were saying how it was already becoming an issue. And just from inside counsel, outside counsels, and just feeling the pressure of getting ready for GDPR. And it was mostly just solved through manual remediation, meaning lawyers and consultants. So we felt that there's an opportunity there. So that's how I came to life. And so we created developer tools to automating privacy compliance for engineers. Ran that for a couple of years. And while call it the plus minus 10 years of running these two businesses, I was an active angel investor. Was fortunate enough to have a couple of hits early on. Plaid sort of being, the
you got early in Plaid
one. Yeah. I mean, honestly, it was pure luck. I can't claim to, to having, foreseen the future. But William and Zach, they happened to be crashing on a good friend of mine's couch. I mean, I've never, I give him full credit for banding together a couple of friends and doing that friends and family round that I guess today you would call a pre-seed in 2012. And then as I was also, going through my first company, then my second company, also started refining my, angel portfolio and strategy. And just started focusing more on B2B SaaS and also infrastructure, data infrastructure, FinTech infrastructure. And so after Ethica, I was offered to join BFF Ventures as a partner, as I've known Doug and Amit there for a long time. We actually were investors in both my businesses, and was really excited to switch sides and then sort of turn the hobby into my full-time job. But as I was joining BFF Ventures, I had also started investing more in Latin America. I've always traveled very regularly to Colombia growing up as a child, so I'm fluent in Spanish and I would say limited in Portuguese. But I never really paid much attention to the tech ecosystem in Colombia, even though I was there all the time to visit friends and family until 2019, when through one of my cousins, as the whole Rappi mafia started exploding there. So Rappi is one of the big success stories, not only for Colombia, but really for the whole region. And to the founders of Rappi, to their credit, they really pushed innovation, and they were very supportive of the early employees wanting to be founders as well. Don't quote me on it, but I'm almost sure that they're actually the one company that have created the most founders. And that's so I definitely a lot of credit goes to them as well, to really fueling the ecosystem in the whole region. But anyways, long short, through one of my cousins, was introduced to a bunch of the early employees there as they started becoming founders, and that really opened my eyes to what was happening in the tech ecosystem, not only in Colombia but in the whole region. Was super fascinated by it. So when I joined Vast, I told Doug and Anik that super excited to join them, but I would love to introduce them to LATAM, as they had never invested in the region before. To their credit, they were super open to it. They supported me. They allowed me to build a thesis and introduce them and their LPs to Latin America. And of the 6 deals that I made while I was at Vast, of the 7 that I did while I was at Vast, 6 ended up being in Latin America. So early 2022, last year, I sort of came into year with the thought that I want to go even more into Latin America. And I also totally understood when Doug and Nick, said like there's only so much that they can serve, because it was just part of the thesis when they raised the fund. So it just made sense in my mind, entrepreneuring me to start my 3rd startup, and this time just being a fund. And I teamed up with a good friend of mine, Derek, who's American, but he's been living in Brazil for plus minus, I would say, about 10 years now. And he's fluent in Portuguese. Actually, when we first met for a while, I thought that actually he's Brazilian. And I remember really well, once I would say to him like, hey man, your English is really good for a Brazilian. And he looks at me, he's like, dude, I grew up in Arizona. I was like, oh wow, okay, so your Portuguese is really good. So yeah, he's done 2 companies in Brazil, and he was also part of a VC fund before, or I should say in between the 2 companies. Ironically, it's a VC fund that is run by all Brazilians, but out of San Francisco, and they invest only in the US. And yeah, we just saw the opportunity in Latin America that when speaking with local founders, we asked them, what is it that you like most about working with us? And why, do you allow us to get in? As we personally and at Vast, got into some great deals. And what we kept hearing over and over is that they said they just really appreciated us being former founders. So between the 2 of us, having done 4 companies before, and also being sector focused, as we decided to only invest in the sectors that we've also built in before ourselves. So that's why BFF, which stands for By Founders for Founders. We just wanted to have a name that is very easy to remember, and also that just has a very straightforward messaging to our positioning in the market. And investing only in B2B SaaS, FinTech, and infrastructure, so being sector focused, and also only pre-seed and seed. That's really where we feel that we can add the most value.
Yeah, so I got a couple comments, and then there's some things that I want to double click on. Number 1, love the name BFF. I love the double entendre, because BFF also means best friends forever. So people want to invest with their friends, they want to support their friends, and venture is a long-term game. It's almost the same length as a marriage, pretty much, right? I mean, a typical fund or company cycle. So cool name. You talked about businesses that depend on ad revenue. I posted something a couple days ago. A lot of these media platforms, TikTok, Facebook, Twitter, a lot of them are allowing people to pay for no ads. And a lot of times, if you're a business or a brand, those are the people that you want to target. You want those people to actually see your ads. But if those people are pretty well-to-do and affluent, they're going to pay the $15 to $20 a month to not see ads. So I think there's going to be, me personally, that's something that I've been really thinking about, just kind of really great organic quality content. So I think all brands are going to have to do that, at least alongside, or one day probably, replacing their ad spend. So that was one comment. And then I wanted to double click a little more for the audience, because there's people that are launching their own fund, they're in banking. They're aspiring asset managers. So can you break down the day in the life of an investment banker, and specifically when you're working on TMT, what does that look like? And like, kind of what's the job entail?
Yeah, it's been quite a while.
Mm-hmm.
It's been 10 years, since, actually more than 10 years, 11 years since last time I was a
Mm-hmm.
banker. But I assume the life of a first, second year analyst hasn't changed that much.
Uh-huh.
Um, I I actually really, I guess a lot of people always like to highlight the fact that you're working a lot of hours,
Yeah.
and it can be very stressful. I actually really enjoyed that because I
Mm-hmm.
much rather have the days go by really fast. That was
Mm-hmm.
actually one of the reasons when I decided that maybe it's time to move on, when I didn't feel as much pressure anymore. I mean, actually, no, that's the wrong way to say. Like the pressure is always there, but when I felt that I wasn't learning as much new anymore, because in the first year everything is super new. You're learning how to build financial models. You're learning how to analyze businesses. You're building a lot of pitch decks, and it's all new and it's all exciting. And the first time you go through the full cycle of building a pitch deck to pitch a potential client, you win the client. Then you go through the work of doing the due diligence, creating a data room, creating a pitch deck for them. And then, your managing directors and VPs, they go through their networks and start figuring out, okay, who will be the best potential buyers for them. You start hitting them up, you go on the roadshow, and then hopefully you get a couple of offers and bids. They go into deeper due diligence, and then hopefully you get some firm offers. And then,
Mm-hmm.
best case scenario, of course, someone bites, you have an agreement, and the acquisition happens. And then you celebrate that acquisition, you get a tombstone, and then you
Mm-hmm.
move on to the next.
Yeah.
So I really enjoyed that, getting
Mm-hmm.
to meet founders, CEOs, from lots of different businesses. And it was exciting to just, and of course, as a first or second year analyst, you just, a body in the room and you're just listening to the conversations, and it's fun
Mm-hmm.
when you're learning. And so for me, that was exciting. I really enjoyed that. But then after 2.5 years, it felt like it was time to move on.
Mm-hmm.
And especially because we were, a middle market investment bank, and I was saying earlier, mostly focused on the sell side mandate, speaking to a lot of tech founders. It just I felt like, I want to enter the arena, and I want to become a founder myself.
Mm-hmm.
And so just felt the right time, and I got lucky through another friend that was introduced to David and Jonathan at Elite Daily, and I was excited to join them on that journey.
Yeah. So, I mean, I would assume like the sourcing is somewhat similar to
Sorry, I can't hear you.
still.
Yeah, now I hear you
Okay,
again.
cool.
Yeah, you were muted.
Yeah, no, I was saying, walk me through the sourcing process in investment banking, because those deals, I'm assuming if you're a middle market bank, you're probably going to be taking some type of retainer for like the manual labor of doing all that work, right? Or is it like success based only? Like if you actually find them a buyer, like what's kind of the business model in banking?
Yeah, so I think, as I remember, bulge bracket and the bank that I was at after
Hmm.
Kitty Swiss, pretty much similar. There's always a small retainer
Hmm.
up
Yeah.
front, but if you only have those retainers, you're definitely not going to have enough to live off that. It's
Yeah.
really just to have some kind of downside protection and pay for a little bit of the bills of the work that
Hmm.
you're starting to get going. But
Yeah.
it's really success based. I mean, the real money
Sure.
you're making on the success fee based.
Hmm.
Again, it's been a long time,
Yeah.
but as I remember, I think it varied, but I think it was somewhere around 2.5%, 3%, something like that.
Yep.
But yeah, don't quote me on it. It's been a long time.
And then how do you source those? Have you felt that the sourcing process is different than venture? Like when you're, obviously I would see it almost as kind of a similar sourcing process as private equity, right? Because private equity, you're using debt to invest in companies and then, fix those companies up. But on the banking side, based on what you described, you're taking that company to the full life cycle. There's a lot of manual labor, putting the deck and selling the client to even take you on. So how do you source those kind of clients? I guess what's like, do you just go to events or use PitchBook or?
I mean, in banking, I was an analyst, so they were encouraging us to go and build relationships and meet founders, but we were
Yeah,
definitely not expected to bring in the deals as analysts. It was really the
got it.
MDs that were focused on that. But as I remember, yeah, it was similar. It was just having the relationships, building relationships with founders at later stage growth stage companies that you felt that they could be interesting. Hopefully getting potential, unsolicited acquisition offers, or and so that's really all relationship based. I guess very similar to running a VC fund. I mean, for us, because we're VC focused, I mean, we're very much trying to keep in the loop with who is thinking about starting new businesses, because for us the mentality is the earlier the better. We're also speaking with founders that we know well and try to collaborate with them and sort of almost incubate them. So there's 2 founders we're speaking with right now that we're friends with, and trying to help them as they're thinking through their next businesses. And it's almost a collaboration and incubating them.
What's the stage? So in banking, at the firm that you were at, what's like the stage that is ripe for an exit? I'm assuming like what, like, I guess, yeah. Can you talk about like maybe the stage and then the revenue, level that we're looking at? Are we looking at like 100 million in revenue minimum and, series C plus?
I'm sure that's changed a lot since last time I was in banking. But if I think, 2009, 10, 11, like those years, 12, we would do deals as little as 25, 15 million revenue.
Okay.
And selling them for 150, 200, a couple $100 million.
Yeah. So I would say like present day, the equivalent is probably double that, I'm assuming, or more.
Yeah, it's a good question. I honestly don't know, but yeah, we would definitely do businesses that would have sort of like that kind of revenue, and also at that time those were Series B companies.
Yeah, sure. They were
I mean,
already
if you think back, if I think back 2011, 12, I mean, a friends and family round, you would raise a couple of 100,000. A seed round would be, between $1 million and $1.5 million. A Series A would be 3 to 5 million, and a Series B would be 5 to 10 million. And the valuation, I mean, I remember, seed rounds were very normal that they would happen, in the 4 or 5 million valuation, and Series A's would happen in the 10 to 15 million valuation.
Yeah. No, yeah, that's good insight. So appreciate that. 2 more questions and then we'll just keep it going. So what are some of the biggest differences between like the middle market banks versus the bulge bracket? And then the second question is, maybe you can, for the audience, unpack earnouts and maybe some things that we should, be aware of, or some learnings that you had on, founders having earnouts, upon exit.
Yeah. So I would say the big difference between a bulge bracket and middle market, I would say the obvious is obviously team size. The bulge brackets are going to have a lot more resources. You're much bigger teams, therefore go after much bigger deals. So some people might find that more exciting. What I liked when switching to a smaller team was that the culture was also different. You were more of a tight knitted group, and I really enjoyed that. And also just part of building startups. I always enjoy these early days when you're 5, 10, 15, 20 people. If I think back to, the companies that I built, I always really enjoyed those early days when you're working towards finding product market fit, and
Yeah.
and just that culture of being a tight knitted group. Even you work the same amount of hours working 24/7, but there's nobody you can hide behind. If you don't do it, it's just not going to get done.
Yeah.
So that get your mentality, I definitely appreciate that,
Mhm.
and it just keeps you honest. To
Yeah.
your second question on earnout, I can speak out of own experience. My earnout, in the first company, for example, we were fortunate enough that it was an unsolicited offer. So my advice to founders would be, if you can, definitely negotiate hard to get your equity paid up front. And then if they want you to stay, to get your earnout as a tag on, not that, for example, you get half paid out at transaction and half paid out after of what is your equity stake anyways.
Mhm.
So we
Yeah.
were fortunate enough that we got everything up front, and
Oh,
then our
nice.
earnout was really a long-term incentive plan, if you want to
Mhm.
think of it like that. And we negotiated hard that also of that, a portion was guaranteed. So as long as
Mhm.
we show up, as long as we're employed, and then there was a kicker on top of it that was tied to revenue goals and also user growth goals.
Mhm.
What I would also say is, if I think back from my learnings, as well as make sure to also have a good partner and employment lawyer, because you're going to be negotiating new employment contracts with the acquirer, and that's not going to be your corporate lawyer, because obviously they're going to have a conflict of interest because they represent the company. They do represent you because you're the founders and you're running the business, but at the end of the day, they're not your personal lawyers. They're your company's,
Mhm.
your corporate lawyers. So as you go through the transaction, at some point they will tell you, like, hey, you have to find another person to be your employment lawyer to negotiate your personal contracts. And we had a good partner, fortunately, who helped
Mhm.
us negotiate our employment contracts, and and it definitely helped us, as we were going
Mhm.
through the earnout, and having the flexibility. My partners, for example, they decided they didn't want to sit through the whole earnout and they wanted to leave earlier.
Yeah. No, that's really helpful insight. Um, so what's funny is, like, there's a saying, if you want to leave your 9 to 5 to start, a lot of people leave their 9 to 5 to work 24/7, right? I mean, so you're joining a company. Pretty much when you join the company, you're not really fun, you're not like free from time and space. You're actually working much more. Sometimes you have issues with your being even available for your loved ones. It can impact your family, it can impact your mental
Yeah,
health.
that's
So
for sure.
what you're helping a lot of, and both of us are parents with kids, so it's difficult to number one, you got to find the right partner, whether it's in business or in your personal life, but also just trying to balance that within everything that you're doing. Like, what advice have you given founders to find that balance and, like, just manage their time better?
Yeah, I mean, it's funny, like you say, you leave the job, and then in theory you can, have your own hours and choose when to work, but you end up working
Yeah.
24/7 because
Yeah.
it's very dear to you. It's your baby, and
Hmm.
it's 24/7 on your mind.
Yeah.
It's a you just can't help it. I guess that's part of being a founder and the startup life. And yeah, it's definitely not easy to have that work-life balance. And so my first company, we I actually mm, I started dating my wife just before quitting my investment banking job. So she's gone the whole ride with me of both companies,
Hmm.
and now the fund. Um, and during the first company, we didn't have kids yet, and
Yeah.
I was 24/7 working, and I definitely did a very bad job at the work-life balance. Like the little time that I
Tough.
was at home, even then, I was on my phone, on my laptop, and definitely went through a rough patches, in
Yeah.
our relationship. And then when we exited, actually during our earnout was when my son, our first child, was born, and that definitely added a lot of stress
Yeah.
to the relationship, and really forced us to figure out our issues, and find that work-life balance. And then started my second business, and the twin girls were born as I was running the second business. And I definitely tried to have more of a work-life balance. So my co-founder in that business, he has two kids as well, and we definitely try to sort of, be home, see the kids, and then, but obviously it didn't work as much as I would have liked to. But I definitely work less on weekends, because then weekends is
Yeah.
just more for the kids. And same now. I Monday to Friday, I try, and so I do morning routines twice a week, so Monday and Friday. So today I took the kids to school. I woke up with them, I breakfast, like the whole process, and
Yeah.
bring them to school. And then weekends, we do it together. So I try to see them at least, in the mornings, and then evenings sometimes as well. I mean, I guess the beauty of, working from home, and sort of having that mix. So what I try to do now is also, when I don't have meetings or dinners or events, I try to take an hour or more through the bedtime routine, and then once they're sleeping, if I have to do more work, then do it once they're sleeping. But yeah, I can definitely highly recommend to do better than me. Try to figure this out earlier. And if you ask my wife, I'm sure she would still tell you that I'm not very good at it.
Yeah. No, it's tough. I mean, look, you're balancing your personal life. There's things going on in the house. Like I have like another property that we own that, like, has some electrical issues. So it's like you're doing multiple things at the same time, and it's tough, and there's pressure to find balance. So I think for you, one thing that I've consciously started to do is actually do less. And, a new saying that I believe is, if you can do less, you can actually do more. I saw like an interesting video that actually had, I don't know if you follow Alex Hormozy, but he did that. He shared this one thing, which was like, look, you know what, this is, a lot of people talk about like having multiple passive income streams, right? Like having like 5 different, businesses that all generate revenue. So like, if you have like a bottle of water and that represents all your time, if you double down and put all of that into one glass and you focus on that one thing, there could be large compounding results. But like, if you got like 8 different, channels where you're putting in a little bit of time, you're super spread thin, you're actually doing, like those businesses probably would be generating much less revenue or scale, because you just don't have enough time to put into it. So I think, for me, a new thing I've been thinking is like, doing less is actually doing more.
Yeah, I mean, I definitely sometimes think that, when speaking to other friends who are post-exit founders, and have some of these passive income these streams, it always sounds nice, but when you start chatting with them, they always say like, yeah, it's never as passive as it sounds. Like you always have to, like one of my friends, he owns a bunch of real estate, so he has to, manage those apartments that he has in the South, and every once in a while something breaks, and he does have a property manager, but still he always says, it's very correlated. The more time he spends making sure that those properties are up and running, and filling the vacancies, the more revenue he sees from it. But yeah, I'm terrible at multitasking. My wife will definitely tell you that. So I can only focus on one thing. So I've done that throughout my career. I've always had one full-time job, and I try to really focus on that.
Yeah, no, absolutely. Okay, so we got a few more minutes. So let's talk a little more about the venture ecosystem. Let's talk a little more about, the fund. What are some of your biggest learnings, maybe in the last 6 months. And, by the way, it was really amazing having you in our Fund Accelerator cohort too. But, what have you kind of learned, especially with just kind of building relationships with LPs and just kind of building the firm?
Yeah, I would say I'm not a very patient person, and
Mm-hmm.
a lot of friends, they tell me like, look, and I sort of knew coming in that raising a fund is definitely a much slower process than
Mm-hmm.
raising for a company.
Yeah.
And I definitely had registered that, and I knew that coming in, but feeling it is something else. And of course, the last
Mm-hmm.
18 months plus minus have also been some of the harshest conditions to go and raise especially first time fund. Um,
Mm-hmm.
but that's definitely been a learning how patient you have to be, and keep following up with people, sending them updates, hopefully showing them good progress. So we've been fortunate. We've done 4 investments. We've had actually two bigger up rounds, one small one. So
Mm-hmm.
we have 1.7 money in invested capital. Of course, it's all paper value, but it's still good to be able to show some fairly quick wins. And it's also interesting how you do get credit for your track record, in our case as angel investors and previous funds, but at the same time you don't. Like, until we got our first closing, we
Mm-hmm.
kept hearing the message loud and clear, like, impressive track record, clearly you have good networks, clearly you have good deal sourcing, but we want to see what kind of investments you can do in BFF. So we warehoused a couple of deals, and that definitely helped us then get to our first closing. And now that we did our first closing earlier this year, now racing towards our second closing, hopefully hitting our targets before the end of the year. And yeah, just got to be patient, build relationships with the LPs, following up with them, and really trying to listen what, because every LP sort of has different things that they look
Mm-hmm.
for, that they like, and just, I guess at the end of the day, everything in life is, if you want to do it well, you have to keep doing it, be perseverant, and if it was easy, everybody would do it. So I very much, I've learned that across my businesses, and it's the last couple of months really reinforced that again. And we also create our little mantra internally, the 4 things that we keep finding ourselves: be on time, be respectful, do proper follow-up, and stay at the table. Those are
Mm-hmm.
sort of like the things that we keep repeating ourselves.
Yeah. Yeah. I mean, look, I've learned a lot of lessons with the businesses that I've ran around sales. I have like so many just personal nuggets. I mean, a lot of times selling is really sometimes like not you pitching, but having the person like just share their problem and like have them actually pitch to you in terms of like why they need your help, because my belief is like sales or like even, fundraising, you're trying to solve a true problem. And some of these people have known this problem for the longest time. Like they've known it. It's been kind of like sitting on their shoulders. And, they're trying to find somebody to solve that problem. And you're the person finally that can do that. But like a lot of times, I've studied sales, like some of the best salespeople actually, they lean back and they actually have the person talk more. But there's different styles. I've seen successful salespeople be the ones that are kind of more leaning back, and it's really the prospect that is really leaning in. And sometimes if you pull back a little bit, it's kind of like dating, right? If you pull back a little bit, that person may want to lean in a little bit because they see that you're a little distant. But then I've seen successful salespeople, be the one that's kind of like on top of them, on top of the prospect, and just stay on top of the prospect until they close. And I've been on both ends. Like I've had somebody close me for a service, and that there was one guy that like he followed up with me multiple times and like just called me multiple times, and then I ended up just like closing, and I ended up paying for the service. But there's been a few people that I've paid for a service where like that person was just kind of distant, And I was like, wow, why is this person not want to work with me? And I ended up chasing them back and signing up. So I've always been just kind of excited about just the whole science behind sales. And I don't know if with just all the founders that you support and just all your businesses, because this ties into fundraising too, right? Sales is, closing capital, it's selling a product, it's getting a job, it's finding a partner. There's so many parallels, which I always say, but like, what's some of the things that you've learned about, just lessons on top of that, on top of like the basic best practices that you shared? Any stories from founders or your past businesses?
Yeah, I mean, I would definitely say that you have got to have that EQ to be able to read the person, or if it's multiple people, the room. And every person, every company is different, has a different culture. Yeah. So I definitely agree that you gotta have that, feeling if someone is going to react better if you stay on top of them, if you're diligent, if you keep hitting them up, or if you should actually just give them a moment, to go through your materials and not be too pushy, because if you're too pushy, they're not going to react well to that either. So it's interesting, as especially as a first-time fund manager, you're speaking to mostly high net worth individuals, family offices, multifamily offices, and there's no clear process with them, and everyone has their own style. And it's definitely interesting how you have to keep in mind who you're talking with and what you think they will prefer. We've closed some LPs, to your point, we've closed some LPs by being very diligent and staying on top of them and keep following up and giving them nuggets. And one LP actually, she said, I really appreciate you being so diligent and following up. And I feel like a lot of the younger generation have lost that. And that's how I got her to commit. And then there's others who I felt that they're more the person that they want to have deeper, longer conversations, but not being bothered in between. They really wanted to get you as a person, as a fund manager, what drives you, and sort of definitely had sort of a little bit of both. And with founders, very similar. Some founders, you've got to absolutely be on top of them, because you know that they're having multiple term sheets, multiple funds who want to follow on, and it's going to move rather quickly. And so you've got to absolutely stay on top of their mind, because they're never going to follow up with you unless you follow up with them. And then some founders who appreciate you not being too pushy, not being too aggressive, and really getting to know them and trying to see how you can help them and show them how you can be a value add investor. And I think the most important that I've learned over the years is have that cue and just knowing your audience.
Yeah, no, I totally agree. And then, before actually closing, I think also lead gen is a huge thing too. So pipeline building, if you're, trying to get prospects on the calendar, two things that I always think about, for businesses, including fund managers, is volume against quality. A lot of times, like, again, doing less is doing more. So if you disqualify people, you're actually qualifying better, because a lot of times there could be people that are just on your calendar that are a waste of time. So what's advice that you have for fund managers that are trying to build an engaged LP pipeline? Where can they go to meet LPs? And I'll start with like the feedback that I've heard. So feedback I've heard is, these databases, it's just not that useful. And most of those people have their email blocked from the databases. So the mass spamming is probably not going to work, because everybody has the same database. So the more curated, kind of tighter, warm intros. That's kind of my take, but would love any more feedback from you.
Yeah, no, I 100% agree with that. I've never even tried any of the mass emails or databases or some of these LP lists that are flying around, because I just before even starting to fundraise, just by speaking to some of our long-time relationships, we got the message pretty loud and clear that LPs really play the long game, really want to get to know you. So highly recommended to be a warm introductions, best through an LP who has already committed to you, and who they respect and listen to, or a fund manager that they've already committed to. That's definitely always the best path. And so because of that, we've definitely tried to have our curated lists of, and it's interesting because there's so many of these, like I think of them as like black box pockets of a lot of capital that you randomly get introduced to a family office, and then they say like, oh yeah, like let me introduce you to my 5-6 people I like to collaborate with, and it's just another pocket, and you get to know these families and their stories, and just like, wow, there's so much capital that you just don't know of. So it's definitely a bit of a black box getting to know the whole family office community, not just in the US, but also in Europe. And you get introduced from one to another, and you just, I mean, like I was saying earlier, just having that perseverance, and you just got to go and hunt and keep knocking on doors, and one introduction leads to another. And it's you would like to think, okay, you're using best use of your time, and you pre-qualify these prospects, but at least for me, I have not been able to really figure that out yet. So any family office or any person that I get introduced to, I'll always jump on a call and speak with them. But usually after one call, you sort of get a sense: are they really deploying? Are they interested in your thesis? In my case, are they interested in Latin America? Like, is there really a realistic chance? But then I've had some cases where they say like, hey, we only invest in US focused GPs, but I really enjoyed the conversation, and let me share your deck with a couple of other people who I think are interested in LATAM. And so I've had that as well. So you never know where a conversation is going to lead to.
This goes to another point that I forgot to mention, but New York in my mind is still a really small town, and it's crazy because I've seen people grow up in their careers. I've seen people that I knew that were little kids in like a tech, co-working space, and those people have gone on to be like successful founders, and they're now like emerging LPs. So I think just kind of be nice to everybody. You never, like, I feel like you'll never know where somebody's going to end. And, in New York, in my mind, it's still a small town. So you'll see the same people at a lot of these events, and you never know like where their career is going to change.
There's a saying, you always meet twice in life.
Yeah. I mean, it's funny because like, it's crazy. I mean, there was a time where like I was starting my career, from tech into venture. And there was a person like I kind of looked up to kind of get advice from. That person was a little condescending to me, and I ended up growing up a little bit, and like myself and that person ended up being on a panel together. But I didn't say anything, and I think on the other side, that same thing has happened to me, where like I've just seen somebody just kind of become like an institutional LP, and like I knew them like when they were just like in business school, so I really, really think just if your edge is if you're just nice to everybody. And I would say like an edge that some people may have over you and I is the young people that can go to all of these events and like really build those connections. Like even if there isn't LPs at these events, like building these true friendships with all these other founders, these VCs, to your point, like there's this black box of like another intro. That could be someone that's a huge, institutional allocator that just kind of met through the ecosystem. There's allocators that go to some of these same events just to kind of learn about the industry. I guess my other question is like, what do you think about educational programming and content and community building? Do you think that's a good strategy for emerging managers to build an LP LP kind of community?
I think it can definitely help. A good friend of mine, Miguel Armasa, he's one of the GPs at Gilgamesh. He has a podcast, and they're fintech focused. So he has a fintech focused podcast.
Yeah,
and that's definitely helped him a lot for deal sourcing, brand building, and I think he's done a really good job.
Yeah.
So I think if you have something that you're really leaning into and it's real and authentic, I think it can definitely help. If you're just gonna put out lots and lots of LinkedIn posts and just general messaging or of macro views that you've already read many times elsewhere or as a newsletter, I personally don't think that's probably not gonna be very value adding, and I don't think that LPs are gonna really appreciate that. But if you have a true unique edge, like some funds have done, their communities of subject matter experts, or their podcasts or a series of events that they do that are really value adding and high. So like the guys at Equal Ventures, for example, with their emerging manager event that they're only doing for the second time, but is already considered, really high quality. I think that they've done a really good job with that. So I think if you do good tactical things that are truly value adding, I think that can be great. But if you do just lots of average outputs, then I don't think that's worth the time.
Yeah, no, that's helpful. Well, hey, Miguel, I know you spent a lot of time, so really appreciate you being generous with your time, and hopefully we can hang out soon, somewhere in the city, and just learned a lot. So appreciate getting to know you on a deeper level. I know we usually meet, virtually, or we grab cocktails a couple times, but hope to do more of this stuff, and glad to get to know you a little better.
Yeah, absolutely. Thanks again for having me. Really appreciate it. Always happy to chat.
Yeah, absolutely. Well, thanks a lot. Have a good weekend, and everyone else, take care.